The information in this podcast is general information and not advice. Standford Financial is authorised under Australian Credit Licence Number 541480. Further information is available at stanfordfinancial.net.
Hello and welcome to On the Couch with Steve, a podcast where we help you navigate the often complex world of buying and selling real estate in Ipswich and the surrounding areas. I'm Steve Athanates. I'm the owner of NG Real Estate here in Ipswich. We're basically going to today to be discussing the latest Reserve Bank of Australia announcement and what that means for you. I'm joined by a great friend of the show, Steve Beach from Standford Financial. Hello, Steve. How are we?
I'm very well, Steve. Thanks for inviting me back.
No worries, mate. Always a pleasure. We always get you back. Now, we obviously made some predictions about what was going to happen with rates, and I was wrong.
Yes.
Oh, I was wrong.
I was right.
You were right.
So
what
now
happened?
Even. We're back to even.
We've had one mistake each. One mistake each. That makes us fair and square.
That's definitely right. So I guess out of the announcement, ultimately rates were on pause. So the cash rate still remains at 4.35%. So not, I guess, the greatest of news that rates were put on pause because, everyone's sort of waiting and hoping for this interest rate reduction or cut. Out of the figures that came from the RBA announcement, there were, a couple of indicators that inflation is slightly on the rise in certain aspects. So inflation from a year-to-year average went from 4.1 to 3.6. So it is still heading down, but they're expecting it to be a little bit lower than that based on their forecast, because the RBA will do a whole heap of forecasts for what's going to happen in the next 6 months, 3 months, 12 months. And if it sort of doesn't fit within their forecast, then they have to make amendments and changes and stuff like that.
Well, we're going to have a bit of a discussion about this because all of the, narrative about interest rates has been that interest rates are going to drop. Of late, and when we say of late, it's probably only really within the last 3 or 4 weeks, maybe, there's been some talk that rates could go up.
Yeah, I guess a lot of questions were about rates going up in the aftermath after the announcement of the RBA. Michelle Bullock gets up and has question time with a whole heap of reporters, and that was quite topical. And that was, in their long summary of their direction, there were some points that talked about that there may be a interest rate rise. I personally, looking through a lot of the data and everything, I think it might be a slight idle threat. Whereas I think in the last couple of months, everyone's sort of been talking about rate cuts coming. When are they coming? Not if they're coming. Like it was talk of May, and then we were talking August. I think at the end of last year. Then we pushed September, November, and then potentially even into next year. I think because there was so much speculation that rates were going to go down, I think some people have spent a little bit more money thinking that they're going to have a bit more bang for their buck, particularly with the stage 3 tax cuts coming into effect 1st of July as well. So everyone should have a little bit more cash per week or per fortnight and per month.
So anyone who was at home who had a mild heart attack thinking when they heard that rates might go back up, we don't think that's correct? We think it's unlikely?
I think it's very unlikely. I think the Reserve Bank's doing a good job in just holding inflation where it is. There was a lot of speculation about the fact that Australia sits at 4.35% as a cash rate, where every other central bank pretty much in the same sort of, climate as us is sitting over 5% as their cash rate. So everyone's like, well, should Australia just go straight up to 5%? And so some people were talking about there potentially could be 3 rate rises to get us over 5% to bring inflation down quite quickly. I don't think we have an economy that could, sustain that or absorb that in any sort of aspect. Being that we're so heavily reliant on variable rates, as where most of the rest of the first world nations do fixed rate mortgages. So big thing that they're talking about from a population side of things is, roughly 1/3 of Australians rent, 1/3 of Australians actually have mortgages, and then there's 1/3 of Australians that own or retirement, that side of thing. So the ones that own want the rates to be higher because they're earning more money on the interest, they're getting better returns on their super and stuff like that. People who are in the mortgage situation going, I'm hemorrhaging money because my mortgage repayments keep going up and up and up and up. But at the same point, people who are renting, people that own those properties are charging more and more for rent. So rent actually had the highest increase in over the last year in the last 15 years. So 2008 was the last time rent increased by, I think it was 7.8% for the year on average.
And what did it go up this year?
So it's 7.8, and previously the highest was 7.6.
Wow. So
there's a big increase in just the rent side of things, which, so as rates go up, it not only affects mortgage holders, definitely 100%, it's affecting probably renters more than the actual mortgage holders at this point in time.
Wow. Well, look, obviously it's not great news for renters, obviously, but that's a real statistic that we're obviously reporting to you here on The Couch with Steve. So stay tuned for more amazing insights as to what's actually happening and how it's going to affect you on a daily basis. Now, you also mentioned stage 3 tax cuts. What does that mean for the average punter?
I guess from, there's certain different levels of how much you earn is how much tax you actually are required to pay. So roughly speaking, the first $30,000 you don't get taxed on, but then from $30,000 to $80,000 previously we were being taxed at 19%. That's now dropping down to 16%. So there's a 3% tax cut. So ultimately, if you're on roughly $80,000, sort of 3%, but keeping in mind it's 3% from 30 to 80, not the first lot. So essentially on $50,000, you're going to get an extra sort of $1,500 in your back pocket. Divide that, it's $30 a week. It all adds up little by little. And if you're earning above that, there's slightly lesser marginal tax relief from 80 to 120, then 120 to 150, and then 180 plus.
All right.
So if you're in the 180 plus, there's a couple of little tax cuts, not as big as what they were anticipating originally, which, to be honest, if you're earning 180 plus, I think it's fine. Not to get the bigger tax cuts. I think they did quite well in moving the tax relief in that sort of lower end bracket.
So what do you think they gave people who make more than 180,000? Why would they get a tax break?
I guess the more money that goes into their back pocket means more money to the economy. So, it's funny, like the government works on fiscal policy, the RBA works on monetary policy. So there's different avenues of stemming inflation by, I guess, at the same time we don't want to see unemployment rise too rapidly. I know we talk about unemployment. They keep talking about that, the fact that they want it to go up. What we're seeing from an unemployment side of things, unemployment isn't really moving. So it's still staying quite low, in record lows. What actually is changing, and they're calling it labour hoarding, is their employers are still holding on to their staff because, like, through COVID, you couldn't get staff. People were on job seeker and job keeper and everything.
Yes.
So holding on to staff because you couldn't hire anybody. So what they're doing is putting people from full-time to part-time or casual, or the actual hours worked per capita is actually reduced. So still the same amount of people as being employed, but they're actually working less hours or getting paid less money because they're not working as many hours.
So the figures are potentially slightly distorted?
Yeah. So, and that's what I guess a lot of the statistics that came out were talking about these sort of factors, and everyone's like, oh, but unemployment's still really low, but the productivity is increased due to working less hours, still maintaining the same amount of productivity. So yes, some of the data that came out, like I think insurance went up 16.6%. For the year. Education's gone up like 6% from an inflation perspective. So rent, inflation, education, and health services all were quite high. But raising the cash rate isn't going to fix any of that. So
it's going to make it worse.
Why is the RBA going to raise rates to stop us spending money on health and education, which you have to do anyway? So and rent, so lifting rate isn't going to help stem the inflation on any of those sort of aspects.
No, and it's obviously going to hurt people really where it hurts, because obviously anyone who's got a family, if you've got kids, you're definitely sending them to school, so you can't avoid that. Obviously you need health protection of some description. Obviously some people just rely on Medicare, but at the end of the day, a lot of people still have private health insurance.
And even if you've got private health, if you go and see the doctor, you still have to pay. Not everyone's bulk billing still, so
Well, I did see something that they're trying to get more GPs to go back to bulk billing. I don't know how that's going to work. I guess they're going to pay the doctors more money, and in order to try and
to stem that. So, and that could be a part of the budget as well that comes out, that there may be more per visit to GPs that are going to be paid so they can reduce. So this is all stuff that can reduce cost of living, is the money that we're out paying when we go to the doctors or when we go to send the kids to school. There can be government relief and those sort of things. So that's what Jim Chalmers has been talking about in I guess the announcement of the federal budget, which comes out next week.
I guess we're going to have a chat. We'll have a chat about that next week.
I'm certain I'll be back in next week to talk about the budget.
Stay tuned. On the couch with Steve. We'll talk about the budget.
I might have to do a bit more research because it's a lot more in depth. But yeah, so with a lot of the things that they're anticipating with that, it will help reduce the cost of living while not putting pressure on inflation. Now, it's going to put pressure on inflation. I think Michelle Bullock and the RBA know that there's going to be more money coming into the economy, not only from tax cuts, but also from the budget. So it'll be interesting to see, I guess, next month when they meet again after the budget and the announcement, and then 2 months after that when we sort of meet back in July, because they don't meet in June, what's going to happen from a cash rate perspective.
Right. Okay. Well, we've unpacked a lot. There's a couple of points there that we'll probably clarify in later episodes of On the Couch with Steve. But obviously, some of the positives, whilst costs of living pressures are increasing with increases in insurance and rents and health and education, the good news is interest rates are on hold.
Rates are on hold. So,
all right.
And that's a big thing that we're seeing at the moment is people trying to get out of that rental trap and getting into the marketplace. So it'd be interesting to see in the budget what sort of government incentive schemes they're going to put on for people getting into the housing markets. A big thing that we're seeing a lot more of, and I think we've got probably 20 on the go at the moment, is family guarantees, where mum and dad put their house up as equity for the kids to buy, because a lot of people actually have the income to be able to afford the mortgage.
So serviceability
is there, but the issue is it's very hard to get the 5 or 10 or 20% deposit. With a family guarantee, the parents are only guaranteeing 20% of the deposit of the new house that the kid's buying, so they don't have to pay lender's mortgage insurance. They get the cheaper interest rates, which makes their repayments a lot more affordable. So it's definitely a stepping stone that we talk quite openly with, particularly the younger generation getting into the marketplace, because they're all on pretty good money. It's just trying to save up that deposit while paying rent and everything else. So you've got proven history that you can make these repayments with rents of $600, $700, $800. I've seen, I had one person the other day, $1,800 per week rent at the Gold Coast.
Wow.
But, and it's like, well, rather than paying off somebody's $1 million mansion, let's look at buying your own home, and so
exactly.
These sort of avenues are definitely open for people.
All right, prediction time. We just said Reserve Bank doesn't meet in June. Next meeting is in July.
No, they meet in June. They don't meet in July. They meet in June, sorry.
They meet in June?
Meet in June.
Meet in June, don't meet in July. All right, so they're going to meet again next month. What's going to happen with interest rates next month?
I'm still predicting pause.
Me too. I've learnt my lesson. I'm going to stick with pause as well. So you've heard it here again today on the Couch with Steve. Interest rates in June from Steve and Steve on hold. So let's see what happens. So obviously, that's, I guess, our session, our episode for today. If you've enjoyed what you've heard today, if you've liked it, if you've got questions or any sort of points you want to raise, we'd love to hear from you. Just click the link below. We'd love to hear from you. Obviously, once again, thank you to Steve Beach from Standford Financial. Always a pleasure, mate.
Thank you again.
No worries. If you'd like to see more of what we're doing here on The Couch with Steve, tune into our next episode and we'll see you soon.